This has been one of the craziest weeks that I've ever seen in crypto, and I'm not just talking about the price. We've been having so much great news coming out recently that it's hard to keep track of it all, and to me it seems like the bull market is just getting started. Right now though, it looks like the Bitcoin price is starting to have a little bit of a cool off from this pump that it had over the past couple of days, and at the time of recording it is just moving a little bit sideways here. Looking at the 4-hour chart, it does look like it actually did put in a bearish divergence right here, which did start to play down to the downside, obviously. But as you can see, the RSI is cooling off a lot faster than the price, and I think we're about to have a bullish divergence right here pretty soon that's going to send us for another leg up to probably fill this pattern that I've been talking about for some time, which is a bull flag, and it has a price target of about $40,000. We're just looking for Bitcoin to get up here and turn this previous higher high into support, which it looks like it actually might be doing right now. But if it does dip back below $30,000, it might actually have more of a cool off than I'm expecting, because we have actually fought with $30,000 a few times here in the past, and it looks like it is significant resistance. However, if we can break through this $30,000 range right here and turn it back into support, then I think it's pretty much all but confirmed that we're not going to be coming back down to make another lower low here, and we're probably not going to be coming back down to $20,000 to fill that CME gap either. As you can see in the last bull market, in the lull we had in the middle of it, we did turn $30,000 into support before exploding higher. And if we do that again, then we might actually end up going to start testing $50,000 and maybe even make another higher high by the end of the year. But I do still expect a lot of sideways momentum, and I don't really expect us to make a higher high or an all-time high here until probably the beginning of next year, or maybe even right after the halving. I could be wrong though, and we might get pumpier earlier than we ever have in the past in this bull cycle, because as I said, we have been having an insane amount of really great news coming out over the past week or so, and it looks like traditional finance is starting to finally pour their money into the crypto space, which means that we could be having trillions of dollars enter the space over the next bull market. Here I'm going to start with the least interesting, which is still really huge news because it was a U.S. Supreme Court ruling on crypto. As this article by Cointelegraph says, the U.S. Supreme Court halted Coinbase's case in its first crypto ruling. The United States Supreme Court decided in favor of the cryptocurrency exchange Coinbase on June 23rd in a partisan opinion that will halt proceedings against the company in 2 California cases. Plaintiffs in the class action lawsuit alleged that Coinbase failed to provide proper relief after users lost money, and that Coinbase allegedly engaged in deceptive advertising. In my opinion, if you want protection after you lose money, then you should just stick to the traditional finance system, because the whole point of cryptocurrency is that it's going to be an immutable ledger, and if you or the government makes bad decisions with this currency, then it's just going to be permanent and there's no way to go back on those actions. This is supposed to incentivize people to make better business or financial decisions, but people are just stupid, and it seems like they want people to hold their hands through their investment process. But this is what they call dumb money, and the smart money is actually starting to enter the equation, so I don't think that small investors like this are going to make that much of an impact on the market anymore. Even the IMF said that banning crypto may not be effective in the long run. According to this article on Cointelegraph, the International Monetary Fund, or IMF, has reiterated its calls for crypto regulation across certain countries, but said an outright ban may not be the best approach. They said if well-designed CBDCs can strengthen the usability, resilience, and efficiency of payment systems and increase financial inclusion in Latin America and the Caribbean, while few countries have completely banned crypto assets given their risk, this approach may not be effective in the long run. The region should instead focus on addressing the drivers of crypto demand, including citizens' unmet digital payment needs, and on improving transparency by recording crypto asset transactions in national statistics. Really what they're trying to say is that they want people to be onboarded into CBDCs so that it will be impossible for them to get back into decentralized cryptocurrencies, and they'll be able to control them without actually having to outright ban cryptocurrency and make everybody suspicious so that they will actually flood in against their wishes. In my opinion, I think that Decentralized cryptocurrencies like Bitcoin are going to be the only way to escape these CBDCs. And once you're locked into them, it's not going to matter if they ban cryptocurrency in general because you're not going to be able to get out of it anyhow. Moving on, in this article by CoinDesk, we have some more good news, but it's still not even any of the greatest news, which I'm going to be getting into later in this video, so don't forget to stick around. It says that MasterCard focuses its Engage program on crypto. The expanded network helps bring new crypto card programs to market and creates crypto to fiat conversion capabilities, MasterCard said. While this is really great news and it is probably going to be onboarding some more normies because it's going to make it easier for them to engage in cryptocurrency activities using traditional finance that they're already comfortable with, I think that this is something that people like us should avoid because this is definitely not the decentralized version of cryptocurrency that Satoshi envisioned. And this is just another way for the traditional finance system to gain control and to know what you're doing with your cryptocurrency, and also to be able to revoke it if they have some kind of a differing point of view from where you stand. It says MasterCard has expanded its Engage program, which links potential card issuers with partners that can provide appropriate technical expertise, allowing a growing cohort of crypto firms to leverage the credit card giant's global network, according to a press release. This news alone would have been huge and probably would have caused the spike that we've been seeing in the price by itself just a few months ago. But we're just getting started because the next story is way bigger. According to this article by Decrypt, the Fed Chair Powell has said that Bitcoin has staying power as an asset class. Jerome Powell said on Wednesday that the U.S. central bank should play a robust federal role in overseeing stablecoins, a sizable slice of the overall crypto market that legislators are trying to craft rules for. Powell also remarked that cryptocurrencies like Bitcoin have staying power. His comments came on Capitol Hill during a semi-annual hearing on monetary policy held by the Republican-led House Financial Services Committee. It's obviously kind of hard to see exactly what their plan is, but from what I can tell, it looks like they think they cannot stop Bitcoin and probably other cryptocurrencies. But all of these regulatory bodies are trying to grasp for power and try to hold on to what power that they can. And they're all trying to figure out where they can play a robust and federal role in overseeing certain sectors of the crypto space. With the Fed releasing FedNow or the CBDC next month, it does seem pretty obvious that they want to probably play a role in overseeing stablecoins, because other stablecoins besides the FedNow are just competition, and they want to be the king of the stablecoins so that they can keep the power in the central bank over all of the dollars that are in existence. In other words, they want to have all the federal power over anybody else who tries to get some reserves of dollars. It goes on to say that Powell said the technology where tokens pegged to the price of a sovereign currency like the dollar and issued by public companies should have a strong federal oversight. We do see payment stablecoins as a form of money, and in all advanced economies, the ultimate source of credibility in money is the central bank. We believe that it would be appropriate to have quite a robust federal role in what happens in the stablecoins going forward. Like I said, he wants to make sure that the ultimate source of credibility and power in the money system is still going to be the central bank, or them, obviously. In other words, they want to make sure that they have total control over any possible avenues that you could take to avoid their basically expirable or turn-offable money that they're trying to roll out starting next month. And while this might not sound like great news because obviously the Fed is trying to keep a firm grasp over basically all of y'all's lives, this is really great news because they finally have admitted that Bitcoin has staying power and that they basically can't stop it. So while they're essentially telling you that they want to maintain control over all of the dollars that get spent, they're also telling you that there is some kind of an avenue for you to escape and that there's not really much that they can do to crush it. The next story is even bigger, and while these aren't really obviously the best news as far as cryptocurrency and what it's supposed to mean, it is really great news if you want to get rich, because this means that a lot of institutional money is going to be pouring into the space over the next couple of years. And the SEC is messing things up so bad that I don't think there's going to be much that they can do here to stop it after they lose all of their credibility because of stupid things like this. According to this article by Decrypt, the SEC has finally approved the first leveraged Bitcoin futures ETF. The US SEC has approved the first leveraged Bitcoin exchange traded fund on Friday. Volatility shares 2x Bitcoin Strategy ETF, or BitX, is scheduled to launch on the Chicago Board Options, or CBOE BZX exchange next Tuesday, June 27th. This is great news for more people to obviously start investing in cryptocurrency technology. And while this isn't a spot Bitcoin ETF, and it doesn't mean that they have to actually hold any of the spot Bitcoin on the balance sheet, in my opinion, this could actually lead to a spot Bitcoin ETF finally being approved. Because in my opinion, this is super irresponsible for the SEC to approve a leveraged Bitcoin futures ETF before there actually is even a spot ETF. As you may have heard probably everybody in the whole crypto space saying in the past, it's probably best to avoid leverage because this is how people get wrecked. It says when we look back on the Bitcoin ETF saga in 5 or 10 years, this will be one of the most ridiculous aspects, a 2x leveraged futures product launching before a straightforward spot ETF, Nate Gerasi said, co-founder of the ETF Institute. And he ended his tweet with wild. This just goes to show that the SEC and especially Gary Gensler don't have any idea what the hell they're doing, and there's a lot of corruption going on because they're just picking and choosing who they're going to approve and going after other people with regulation by enforcement, which is not a great way to run this country. Gary Gensler is making a mockery out of the SEC, and he's definitely putting a dent in the innovation that America is having moving forward and putting us behind other countries in the adoption of cryptocurrency, letting people like Russia and China get ahead of us. In my opinion, this is absolutely absurd, and I hope that they get Gary Gensler out of the SEC before he does even more damage to the American economy. If you watched my last video, or really any other video on cryptocurrency in the past couple of weeks, then you probably already know that BlackRock is trying to get the first spot Bitcoin ETF, and they do have about a 575 to 1 approval rating from the SEC, meaning that they are almost certainly guaranteed to get this spot Bitcoin ETF approved. But that was just the beginning, because according to this Cointelegraph article, BlackRock's spot Bitcoin ETF renews optimism and sparks a wave of new filings. I also mentioned in my last video, and you've probably heard, that crypto exchange backed by Fidelity, Charles Schwab, and Citadel launches with additional investors. But they're not just launching a crypto exchange, because according to this article, Fidelity is also rumored to make a seismic crypto move soon. Rumors are that Fidelity will buy out Grayscale or file a spot Bitcoin ETF application, just as BlackRock did last week. All of this is coming on the heels of the SEC attacking native crypto industries or companies, and this means that they're basically trying to rob all of the power from the cryptocurrency industry and the native businesses that have popped up around the technology and give it right to the traditional financial system that has been screwing us over for the last 200 years. But this is just the beginning, because now Wisdom Tree has also filed for a spot Bitcoin ETF. Then shortly after that, Invesco also did the same thing, and TradFi was just getting started with all of this Bitcoin ETF craze, because Valkyrie and Bitwise also take a second stab at Bitcoin spot ETF approval, according to this article on BN Crypto. It looks like basically all of the people that have been trying to get spot Bitcoin ETFs and being denied over the past 10 years by the SEC are now looking at BlackRock's example and updating all of their applications to follow BlackRock's plan and basically up the chances that they're going to be approved by the SEC as well. If they do actually accept BlackRock's application for a spot Bitcoin ETF, then they're going to probably have to accept a bunch of other ones, or else it's going to be very obvious, even more than it already is, that they're giving preferential treatment to these big companies that basically run the U.S. economy. Every day it's becoming more and more clear how much corruption there is in the United States and how much this corruption is affecting the traditional financial system and all of our lives together. It's not just America, though, because according to this CoinDesk article right here, Deutsche Bank has applied for digital asset license in Germany as TradFi pushes further into crypto. This is pretty interesting because just a couple months ago it seemed like Deutsche Bank was actually dead and that they were going to be absorbed by the government and basically distributed like other banks were here in America. But they must have stabilized themselves and they're looking forward to the future. because they're not going to be missing out on all of the traditional finance pouring into cryptocurrency over here in America, and they're going to seize this opportunity to also try to take the power away from native cryptocurrency companies so that they can secure their grip around your financial neck for the rest of your lives. This is why you want to self-custody your cryptocurrency, because companies like this and all of the traditional finance system are going to try to get their hands on all of the cryptocurrency so that they can treat it just like they have the dollar over the past 100 years, basically being able to deny you access to your funds at any time and loan your hard-earned money out to other people, making you take all of the risk and making them buttloads of money while you stay in poverty. The only way to escape that is to self-custody your own cryptocurrency and not let these people get their hands on it. And this could be the last opportunity to get your hands on some cryptocurrency for the cheap, and before all of these huge companies in the traditional finance system take control over all of the digital assets and there's just none left on the market. This is because, just as this article right here by Forbes says, a major bank reveals that a $15 trillion earthquake could be headed for Bitcoin, Ethereum, BNB, XRP, Cardano, Dogecoin, Tron, Solana, and the Polygon price. Now, alongside BlackRock's nearly $10 trillion in assets under management potentially being opened up to the Bitcoin and crypto market, a survey by Laser Digital and digital assets subsidiary of major banking giant Nomura has revealed that 96% of professional investors managing almost $5 trillion are keen to invest in crypto. After all of these guys accumulate in what some people are calling the great accumulation in this cycle, we might not ever have a bear market again like we've had in the past cycles, because these institutional investors do not panic sell. They actually drive the market. And whenever $15 trillion pours into the Bitcoin market cap, it's going to become virtually impossible to even get your hands on a few Satoshis. This article goes on to say, our comprehensive study reveals that the majority of institutional investors surveyed saw a clear role for digital assets in the investment management landscape and the benefits that they can bring, such as a greater diversification of portfolios. The 303 professional investors surveyed represent a group that collectively manages almost $5 trillion in assets. The survey showed that 82% of the investors had a positive outlook on both Bitcoin and Ethereum, and 88% said that they or their clients were considering investing in cryptocurrencies. Meanwhile, on the mainstream media, all of these people say that Bitcoin and cryptocurrency are dead, and they are basically just Ratcoin squared and things like that, and they're used to fund terrorism and evade taxes and money laundering and just used by criminals and everything else that you could possibly think of to try to scare people out of the market. Meanwhile, they're just accumulating, and 90% of them actually have a positive outlook on the cryptocurrency space, while to the public, they're trying to scare everybody out of the market so that they can get in low, and as I keep saying, that they can continue to accumulate and consolidate the power. This has been a really crazy week for news, but it's very telling what's going on in the space, because as I said in my previous video, they're not even trying to hide it anymore. The SEC is directly attacking native crypto companies, and then just about a week later, they just start handing all of the power over to traditional finance. If this doesn't make it obvious, and if you can't see what's going on by this point, then honestly, there's probably no saving you. But for anybody with half of a brain, I think it's pretty obvious that Bitcoin and cryptocurrency are actually going to be the only way to escape the traditional finance system and the CBDC that they're going to be laying out and imposing on people's lives starting next month. Just like at the beginning of the pandemic, we followed China into lockdowns, we're going to follow them into the social credit system and the digital currency system. The world is becoming more authoritarian and more centralized, and at this point, the only opportunity to escape is going to be Bitcoin, but that door is closing very soon, and by the time Bitcoin reaches new all-time highs, it might actually be too late. Let me know in the comments, could the government be any more obvious in their sinister plans, and do you have enough cryptocurrency to escape the FedNow system? Then after that, don't forget to head over to the onlygoodcrypto.com merch store so that you can pick up some of this limited edition crypto merch, like this shirt down here that says I survived crypto winter, so that you can show everybody that you held on and you survived crypto winter, because this design is going to be disappearing real soon, as it is here only for a limited time. And remember that when you wear only good, you're going to feel only good. So don't forget to do only good every day and head on over to onlygoodcrypto.com right after this video. Thank you guys so much for watching. I hope you have a wonderful day, and don't forget to hit that subscribe button so that I can keep you guys updated on all the great crypto news all the time. I'll see you guys next time. Bye. This is Ibisu. He's named after one of the 7 lucky gods of Japan. According to legend, he will bring wealth and prosperity to anybody who evokes his name. So don't forget to write his name in the comments or you'll bring dishonor to your whole portfolio. And check out this video right here. Say goodbye, Ibisu.